Even in the last 6 weeks since mortgage rates climbed again over 7%, home prices have not declined recently. We can see that slightly fewer purchases are happening. The quantity demanded dips, but not the prices. They're not dipping. As a result, though, available inventory of homes for sale is slightly higher each week. Not a lot higher, but inching up. Mortgage rates are sitting at their highest levels in many years. And earlier this year, it looked like rates might ease back down a bit. But for a month and a half, they've bounced back up. So the economy, the surprisingly strong economy, has the market's assuming that the Fed will keep rates higher for longer, and therefore mortgage rates are following suit. Higher mortgage rates mean higher monthly payments, of course, and less affordability for home buyers. And really, that results in slightly fewer transactions. Just a few fewer people buy homes. With fewer transactions, inventory is building just a bit as we approach the end of summer. So when will inventory peak for the year? We've got a few more weeks at least, but then we'll be on the watch if another boost of mortgage rates like last September, if that might derail the real estate market again this year. This volatility is why Altos Research tracks every home for sale in the country every week. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. There is so much signal that we already know about the future of the real estate market in the data right now. I'm Mike Simonsen. I'm the founder of Altos Research. Let's take a look at those signals after the first week of August, 2023. Inventory is still climbing a bit, as I mentioned, each week as we approach the end of the summer season. There are 488,000 single-family homes on the market right now. That's an increase of less than 1% from last week. There are 10% fewer homes on the market now than last year at this time. I expect inventory to climb for another 3 weeks until the end of the month. I expect another 1% inventory growth, for example, this coming week, and then the pace will level off and start to decline in September. It's pretty common for inventory to peak the last week of August. In fact, inventory last year had peaked in August. It had rounded the top and started declining for the fall when we had that September spike in mortgage interest rates. And so the number of homes on the market last year jumped in September and October, which was very unusual. If rates jump again this fall, I'd expect the same behavior. You can see that unusual increase in inventory in this chart in the light red line from last year. See, in August, the inventory had started to curve back down, but in September, buyers stopped and inventory surged. Last year, inventory peaked during the last week of October. Compare that to this year's curve, and you can see how we'll end 2023 with probably 20% fewer homes on the market than the year prior. I've said this before, and I'll repeat. It seems to me that consumers are more sensitive to the change in mortgage rates than the absolute levels. Mortgage rates are over 7% now, and you can see that in the data. The demand is slow. Last year, though, it was that jump from the low sixes to 7.5 in just a few weeks. It was that jump that stopped buyers cold. The moment of change where people stopped buying. Those buyers stopped, and so inventory grew late last year. Now rates are at 7%, but they've been at this level basically the whole year. And so while demand is slow, it isn't falling. I haven't seen any indication that mortgage rates will drop from here, but if they did, buyers would respond and available inventory of unsold homes would also drop as well. It's no secret that sellers are absent in this market. Each week, we're seeing only 61 or 62,000 single-family homes hit the market anywhere in the U.S., all across the country. So it was at this point last year when the new listings started plummeting each week. In September, even though new sellers were few, the buyers were even fewer, so that's when inventory rose. I've highlighted September on this chart. You can see through July, the new listings volume last year was in the normal range as previous years. Suddenly, though, new listings volumes dropped each week. That was the same time as buyers stopped, of course. And so at the time, I focused on the buyers. So only really on the demand side of the equation. I began to get, bearish on home prices for 2023. Had I been more wise, more attentive, I could have seen the seeds of this year's supply, this low supply crisis that we've had. I could have been seeing it as early as August last year, but I'd really only focused on the demand side. So you can see how the dark red line on this chart is dramatically fewer sellers each week than in normal years, any recent years. The important takeaway in the new listings data is that there is still no sign anywhere in the data of a surge in sellers. There's no sign of inventory growing substantially anywhere in the near future. There are no Airbnb bust owners unloading in bulk. There are no investors panicking. There are no homeowners distressed and unable to pay their mortgages. A year ago, we could have started to see this trend, and there were still lots of people who were assuming a bubble burst scenario was playing out, that we'd have tons more supply and weak demand and therefore plummeting home prices. But none of those fears played out this year, of course. But the economy could still tank from here, right? So it is important that we don't assume this market won't change. If some of these classes of homeowners, investors, if they start to need to unload, if some of those fears about the housing market finally start to happen, we'll see it very quickly here in the weekly new listings data. As of right now, there is no surge. There's no sign of any surge in new listings, like none. Our monthly Altos Research webinar, where we dive into the details of all the available inventory of the homes for sale, all the pricing signals, all the forecast of where inventory will go, all the local markets. That's next Thursday at August 17th at 10 a.m. Pacific. That's our August webinar. There's a link in the description below to join us. There are almost 1,000 people registered for this webinar already. So click that below to join us. That's next Thursday, August 17 at 10 a.m. Pacific. So that brings us to the pace of sales. We're still running below last year's pace of new contracts each week, about 5% fewer sales now each week than last year at this time. And even while the sales rate was tumbling last year, there's still fewer sales right now. The demand by buyers is low, of course, but just as we just saw, this is a supply-constrained market. There are so few new listings each week, it is impossible for sales rates to climb. As long as mortgage rates stay at or above 7%, you can easily see how this slow sales rate will continue. Maybe in September, October, if we're lucky, then we'll see that the sales rate starts coming in higher than the abysmal rate of late last year. Because we had so many surprising green shoots about the housing market all year, I've been looking for signs for the transaction volume to pick up. Maybe that we'd end 2023 stronger than 2022, but man, the consumers are just very slow to buy at 7%, and really that shows no signs of changing. So there were 66,000 new pending contracts this week with single-family homes across the country. That's 5% fewer than last year, as I mentioned. It's 25 to 30% fewer sales each week than in 2021. And the sales rate just shows no signs of growing. There's no inventory for buyers to buy. One implication, though, is that you should expect downward revisions in the forthcoming pending sales reports from NAR over the next few months. We've been at this like 4.2 million seasonally adjusted sales rate, and I could see that sliding closer to 4 million. I just haven't seen any indication that it'll grow, the transaction volume will grow. In this chart, the height of each bar is the total count of homes in contract in a given week. The light portion of the bar are the new contracts that week. So there are 10% fewer homes in contract now than last year at this time, with 5% new contracts each week. Maybe by September, that starts to invert and we have more sales so that the fourth quarter 2023 is a little stronger than Q4 last year. Meanwhile, home prices are flat to a little higher than last year at this time, depending on how you measure home prices. The median price of single-family homes in the U.S. is $450,000 right now. These are all the homes that are available to purchase on the market. You can see the dark red line here at the far right end of the chart. Prices are just off their seasonal peak and just below the all-time high set last year in June. The home prices tend to cluster around the big numbers like 450K, so it is not uncommon to have several weeks where the median price is unchanged, right at 450 or just a fraction below 449,900 or so. Lots of properties get priced at that threshold, so the buyers that are searching with an upper bound of 450 will see them. So there are very few 451s and a lot of 449s. We can already see that home prices will have normal seasonal pressure to decline over the rest of the year. Normal seasonal changes. Compare that to last year, and you could see how steadily prices ratcheted down in the dark red line. You can see how steadily they ratcheted down week over week last year. There's no indication in the data that home prices will drop like they did late last year. One of the places those leading indicators is in the median price of the newly listed properties each week. Sellers and listing agents in aggregate know exactly where to price the homes, where the demand is. And so we can use the changes in that cohort to know where future sales prices will be. The newly listed cohort this week was at $399,000, $499,000, just a hair under $400K. The light red line here is off the peak from earlier in the year, as it always is by August. Late last year, it was way off already and dropping quickly each week. That's not happening now. If you look in the middle of the chart, you can see how the light red line in 2020 and 2021 stayed elevated late in the year. And that's where we could see that the buyer demand just kept pushing home prices higher. We don't have upward price pressure right now, of course, either. But it is always useful to keep our eye on the price of the new listings to watch for the next shift in demand. When we look at the price of the homes in contract, we can see that the median price of homes is $385,000 right now. It's running about 3% higher than last year. The median price of last year was $375K. So you can see how the dark red line now is consistently priced above last year's light red curve. The home prices fell last year in June and July. And again, that was when the pandemic buying frenzy when cheap money were like finally gone forever. But then they fell again in the fourth quarter with that late summer surge in mortgage rates. So if you are communicating with buyers and sellers about price expectations, maybe they're on the fence, they're buyers on the fence waiting for prices to drop, it's probably wise for them to see that there is no sign of prices dropping. Likewise, if you have sellers who need to not panic about how much they can get for their home, it's really important data for them to see that home prices are essentially, they're the same or a little bit higher than they were last year at this time. So at Altos, that's why we track every home for sale in the country every week. There's so much signal in the active market compared to looking at the lagging closed sales prices that doesn't tell you. If you need to help buyers and sellers understand the housing market, help them make decisions, go to altosresearch.com and book a free consult with our team. We'll help you talk about the market, your local market, with your clients and prospects today. So there's a link in the description below to go to Altos. But also don't forget the webinar next Thursday, August 17 at 10 a.m. Pacific. Those are limited to 1,000 attendees, and we get way more than that who want to join each month. We have a ton of registrations already. You can still reserve your spot, though, so click that webinar registration link in the description below to save your spot and join us next week, Thursday. All right, everybody. More next week. Thanks.